it's like, okay, like on the secondary market, it's bombing. Yes, that's public sentiment. That's not the actual inner workings and the what Warren might say is the value of the company.
Yeah. Yeah.
And so I do think it's a little bit misguided in terms of you're poking fun at the wrong thing.
Yeah.
You know, it's like the stock price might be low, but that doesn't indicate where the company is or where it's going. And he said as much to employees during the time.
Yeah.
You know, don't focus on the stock price. We know where we're going. Put our heads down. Let's get there.
It's long-term thinking, baby.
Exactly.
And another thing too, since you called out Warren right there, is we saw that with Warren where during that dot-com bubble, everybody was like, why are you not investing? Why are you not investing? And then dot-com bubble burst.
Too many fastballs.
And then you saw him start to really make his moves. And you're like, oh.
Eating it up.
You know, and it's one of those things where if you can make it through the short-term jumps and spikes and stay focused and laser focused on the long-term plan, it's crazy how much you can grow.
Yeah, a little bit of like delayed gratification, a little bit of strategic planning.
And that's true in business and in life.
Exactly.
In terms of like a less tangible way of measuring it is skill development might be a thing.
Oh yeah.
Where if you want to get better at something, you start to see, short term, you might not see the jumps in the improvement, but long term, you can see the investments pay off. Exactly. Exactly.
Yes.
And this is another thing too, where the reinvestment is a reinvestment in the value of the company, and that's what ends up growing the business, and it compounds like we're seeing right now. The Amazon of 2026 is not the Amazon of 2020 or 2001.
Well, it is. It was just reinvested in.
Yeah, it's a growth version. Yeah, so, Amazon posted its first quarterly profit in Q4 of 2001.
Oh yeah.
$5 billion profit, over $1 billion in revenue.
I mean, any corporation can play with these numbers any way they want to. So like, don't be fooled into thinking that everyone's playing the same game. Like they can make those numbers do whatever they want.
Yeah, it's like, well, we have $1 billion in revenue. It's like, well, how much are you profiting? But I mean, they were open about that.
Yeah.
They were also a public company.
Right.
But their first full year profit came in 2003. The net income was $35 million on $5.3 billion in revenue. Amazon Marketplace started in 2000, and this is where they started to allow third-party sellers on the platform, which was counterintuitive for the time. People were saying, why are you inviting your competitors onto your site? And his reasoning was, if someone else had a better price or selection, the customer should first find it on Amazon. Third-party sales eventually grew to more than 60% of all transactions on the platform. And of course, we see what it is today, where you can go and list your products on there and sell.
Right.
But this is what basically enabled the flywheel. And in a meeting with business author Jim Collins, he wrote Good to Great. Bezos sketched out the Amazon flywheel on a napkin, and he talked about how lower prices attract more customers attract more sellers increase selection, more selection improves customer experience, better experience drives more traffic lowers per unit costs, lower costs enable lower prices, and the wheel keeps spinning.
Yeah.
And this self-reinforcing loop became the strategic engine of everything that we see on Amazon today.
That's interesting. I don't think it's their only strategic play. They were very ruthless in the way that they allowed these third-party retailers to operate on their own turf. But yeah, I mean, to even have that vision and that infrastructure of, hey, we need this flywheel, it's going to work this way, and then we can attack it where the bottlenecks are, I think is a very smart way to look at your business.
Yeah, I think there's let's go into a couple more of these different things that we see today, but were planted early on. And then I want to talk a little bit about the third-party retailers, because I think you brought up a contentious point.
Contentious? Okay.
Yeah. And so
yeah, let's do it.
We have the Amazon Prime 2005 launched.
Big moment.
And this was it started with a limited 2-day shipping for a flat annual fee of $79. Internal skeptics were like, this doesn't make sense. It would be too expensive. Basically that cost wouldn't justify the
I don't think it's about
shipping.
the cost, right? It's not about that. It's the psychological feeling I get that I can pay one time, and now every time I pay for something on Amazon, I see this thing that says free 2-day shipping.
Yeah. It's this in this ecosystem of building out the ecosystem. I mean, we just
Amazon.
dropped some drive-by and so yeah, they it was Prime became the most, it's obvious, the most powerful membership loyalty program in e-commerce history.